I think that constantly finding ways to maximize your efficiency and get more punch for the time you spend is really important. I think you have to take a wider view than just like how many hours are you in the office, and be realistic that that's not always going to be the thing that's most productive for you.
Alrighty, hello everyone, and welcome to the Deal Maker Show. So today we have another guest. Another guest that, again, quite an inspiring conversation that we have in front of us. We're going to be talking about the whole good stuff of the building, the scaling, the financing. When things go well, when things go not so well. So we're going to be talking. I always say that you either succeed or you learn. So there's going to be quite a few lessons from the previous venture that he did, but right now his current venture is a rocket ship. So again, we're going to learn about the founding story, becoming co-founders with his co-founder, raising 80 million bucks. I mean, you name it. So brace yourself for quite the conversation. So without further ado, let's welcome our guest today, Ben Borodach. Welcome to the show.
Thank you so much for having me, Alejandro.
So originally born in the Bronx, but raised in New Jersey. Give us a walk through memory lane. How was life growing up for you?
I don't remember too much of that. It was more known as Riverdale, I guess, which is technically in the Bronx. And my parents moved to North Jersey when I was fairly young. I'm the oldest of four siblings, so it was a pretty crazy time. Had two siblings, 2 years, both sequentially after me, so it was already always a pretty rambunctious time growing up.
That's amazing. And how did you get into like the whole thing of computers, problem solving? I mean, was that something that you developed while growing up, or where did that spark from?
I was raised by two lawyers, so I always thought that I was probably going to be a lawyer because that's what I think other lawyers sort of instill upon you. And at some point in my time at NYU, I met this professor named Larry Lenehan, who was a venture capitalist at Firstmark Capital, which was, I think, at the time, sort of still probably one of the preeminent firms, specifically headquartered out of New York. And he taught a class in the business school called Ready, Fire, Aim, and it was all about build first and ask questions later. And so I took that class and won an astounding $12,500 as an investment, which was his salary, I guess, from the NYU Business School, and sort of parallel tracked my first company while attending university. So that's
I remember Larry from back in the day. I mean, the guy was always like super well dressed from head to toes, and he was saying that was something that I remember from Larry. That's for sure.
I don't think I've ever met a venture capitalist that dresses as well as Larry.
That's amazing. So obviously, like during this time is when you got started, as you were alluding to, the first company. So that was called Publish. So give us some, highlights on perhaps what were the, sequences of events there for you to get going with the company, how it all happened with Firstmark also backing you guys and what you were doing, and then also, what happened, with the outcome of the company.
Yeah, so we were very young. We were sophomores at NYU and Rutgers, where my co-founder was at the time. And we had this idea. We had been doing marketing and website consulting for small businesses. So we started to learn about building websites and sort of what businesses need to drive leads. And this was sort of back in 2010, 2011, when CRMs were really blowing up, HubSpot, Salesforce, Marketo, and others. And we realized there was sort of a disconnect between the CRM and the content that was on the website. And so the idea behind the company was to basically dynamically render content, mostly within the B2B realm. So think webinars, ebooks, podcasts, other white papers, and more dynamically serve up the content, to the customer base. I think we would have been super successful had we stuck with it. So we raised about $250,000, which back then was actually a seed round. The New York Angels wanted to put more money into the company, and we were kind of running this out of our college dorm rooms while telling our parents that we were sort of getting our degree, which we all eventually did get. And I think it was just a classic story of making way too many first-time mistakes. We didn't really understand how to go from an MVP to a production scale product. We didn't fully understand even what the enterprise contracting process would look like. So we finally got a buyer. I think it may have been someone on the marketing team at TriNet or one of the other POs that was interested in this. And then they were like, okay, send me a contract. And we were sort of just not even exactly sure how to proceed. And so I think what it really inspired me, and ultimately what we decided to do is just not take on more capital. So we ran it kind of out of the dorm room for another year and eventually realized probably we didn't have what it took at that point. And so I think it gave me a couple of really important lessons. One is how hard it was to build a successful startup company. And it actually took me about 10 years until I was willing to try it again because I had to go learn everything I found out that I didn't know. And the second thing is how much I loved building and scaling technology. And so from there, I went to Deloitte Consulting, which was probably not the classical thing that a tech entrepreneur would do, but it gave me unbelievable access to the largest financial executives in the world, at the largest insurance companies and payments companies, and sort of the problems that they were facing on the one hand, and also sort of the challenges that they had in operationalizing those. And so it really gave me a masterclass in how business is run at the highest level within financial services. And I became the go-to person at Deloitte for answering challenging innovation questions, across insurance, wealth management, and banking. And so it allowed me to get sort of an unparalleled access, and also develop a real expertise within financial services.
But that's not easy. For you to come to that conclusion that you need to learn certain things because you don't know what you don't know. So anyone in your position, as they say, once an entrepreneur, always an entrepreneur. You would have just like been like, okay, I fell on this one. That was painful, but I'll get back and do it again. But in this case, you were very strategic. You were like, you know what, I may do it again, but before I need to learn things that I don't know. So what do you think gave you access to really understand that your path, needed to pause as an entrepreneur for a bit until you were ready to do it again?
Yeah, it's a great question. That was kind of on the back of everybody thought they were going to be Mark Zuckerberg or Evan Spiegel from Snapchat. I think first of all, a recognition that I loved complex problems and probably my calling was more enterprise problems. I think if I was more interested in consumer or sort of direct to consumer apps, it would have probably changed what I had done. I probably would have gone to maybe another startup and been a product manager or something like that. But I think being an entrepreneur is the ultimate exercise in humility. I think yes, it's true. We sometimes put these people on pedestals, especially when they're extremely successful or in moments where they have extreme success. But I think on the way to that success, you have to remember that there was tons and tons of failure, and the only way that they were able to get to that point was by digesting that, reflecting, pivoting, and moving forward. Yes, we all have to move forward, but if you don't recognize that you failed, there's no way that you'll learn to succeed the second time. And so I think, I just diagnosed it. I'm a systems thinker. And I said, look, I don't understand how enterprise sales processes work. I don't understand enterprise requirements. I don't necessarily even understand how to build relationships with enterprise buyers. And so I needed to go to a place that would teach me those things. And it turned out management consulting actually is a great place to go learn. And I'm very thankful for my time at Deloitte. They really gave me a lot, and I benefited a lot for the way that they invest in their young professionals.
So then after Deloitte Team 8, which gave you a little bit more of that startup-y, vibe. So what happened with Team 8? Because that was the most immediate, I would say, chapter before being like, hey, I'm ready for the next, entrepreneurial initiative.
Yeah, and you say sometimes you create your own luck. I think Teammate was somewhat a bit of circumstance, somewhat a bit of luck. Those were a group of individuals that had worked at the intelligence agencies at the highest levels. I worked with an individual named Nadav, and his whole thesis was that fixing cybersecurity was broken, and that the way to change it was not just more venture capital, but it was actually bringing together the largest platforms in the world, like Microsoft and Cisco and Citibank, that all became investors, a platform that allowed entrepreneurs to think beyond just building for the next 6 to 18 months, talent that could solve these very difficult technical challenges, and obviously a robust go-to-market platform. And so I joined him as chief of staff, and I eventually ended up leading corporate strategy for the group. We went from about 40 million AUM and one fund when I joined them to a fund family of 4 to 5 funds and about $1 billion under management. And so I was involved in many different things over my 4 years there. And so, for me, I was never that passionate about cybersecurity. I always kind of believed that if someone wanted to hack something, they could. And so it was more about slowing people down. And of course, many of the largest organizations are really dealing with tons and tons of patchwork. It is complex, which I did find inspiring, but I really wanted to unlock the business productivity, not play offense and defense with the bad guys. But what was attractive to me about it was really two things. One was thinking about a huge scale. Nadav was a general. We were, Admiral Rogers, who ran the NSA, became an operating partner there. We worked with, the Fortune 500. Doug McMillan from Walmart would regularly spend time in our office, and so you just got to see things from the widest, biggest scale possible. And so it really was a landscape, and a breeding ground to just think big. And so when you think about what we're doing today in April, we're thinking about the totality of the tax experience for 170 million American households and 32 million small businesses that are paying $3 trillion a year, in taxes. And so we want to optimize that. That's a very big problem. And we needed to build the first national tax engine in 20 years. And so for us, I think it was, or for me at least, it was kind of a superpower to think big. And the second one is how do you do it? Because at that time, everything coming out of Silicon Valley and a lot of the startups was sort of, that classical build an MVP, iterate, and kind of some of what we were talking about at Teammate is that doesn't always work. You can't iterate on a Fortune 500 IT infrastructure. Like that's not a thing. They're not going to let you crash and break things. And so I think for me, it was a different build model. It was being able to build more thoughtfully and have a time horizon that didn't think maybe in 6 to 12 month increments, but think maybe more in years, but then break things into smaller components and de-risk them. And so I think April is a good example of that. It took us 3 years to build our national tax engine, but along the way, we were able to launch, just with the IRS in a couple of states. Then we rolled out more states, and we were able to bring um, other fintechs and organizations that were building on top of our infrastructure along with us for pilots and initial rollouts. And that allowed us to de-risk the model and de-risk the technology that we were building. So I credit a lot of the way that we built April, based on the time that I'd spent at Teammate. And obviously, I spun April out of Teammate, so they became an investor and now board member, and I have a great relationship with them.
That's amazing. And now, in this case, how did you find your co-founder? Because I mean, co-founder relationships are the biggest decision that one makes. So how did you guys really come across each other?
Yeah, it's a good question. I think, the first thing I'd say is what I was looking in a co-founder. So I tend to be more the operationally minded, business oriented person. And I knew that to do what I wanted to do, I needed a technologist. So that was kind of one. And then I think also from a worldview, I wanted someone that thought about the world in some ways similarly to myself, in the sense of, the grit that would be required to take on a problem of this magnitude. Someone that would work really hard, someone who is also a good person, but also and someone who could challenge me, but also someone that complemented some of the things that I'm not as good at, both at a technical level, but also on a personal and professional one. And so I kind of had done. This was sort of in COVID, and so I had time to reflect on sort of who I was as a person. I'd gotten married and had our first kid, so it kind of during those times you tend to be a little bit more introspective, maybe, and so I was thinking a lot about what I wanted, and then also how do you actually date? Like, how do you do co-founder dating? Right, that's not exactly one thing is to work with a person and meet them and realize that, but I didn't sort of have that person that I'd worked with that I thought was going to be the right fit. And so actually I did a matchmaking process that Teammate helped me with, and I ended up meeting a couple of people, mainly through their network, that were great technologists. And I found Daniel, who at the time was CTO of Waze and Google Israel, very prolific data scientist and also a wonderful person. And Daniel and I actually did sort of a self-inflicted matchmaking, which involved both meeting one another, both in person and virtually. It was a little tough because it was COVID then, so a lot of it had to be virtual. But I think the thing that sort of I'm most proud of when I reflect on the now 4+ year partnership we have is we actually both wrote a pretty lengthy manifesto about what we both believed about the world and what needed to be true to make this venture successful. And then we would edit one another's writing until we got to a place that there was sort of either no more disagreements or agreements and sort of agreeing to commit. And that's how we've run the company ever since.
And April, just so that the people that are listening get it, what ended up being April? What's the business model and how do you guys make money?
Yeah, so the genesis of April is that tax, which is a very painful activity for Americans across the board to do. Currently, it's siloed, it's retrospective, it's once a year. We think that ought to be done inside of existing finance apps that you're already using. So your bank, your payroll company, your money management platform. And we built an amazing platform to embed tax inside financial decisions by building the most connected tax software in the world. So we sell our product, which is, think of it as a white label version of TurboTax, is probably like the easiest kind of way to think about it. We sell that to the largest banking, wealth management, payroll platforms in the U.S. market and provide them a wholesale enterprise platform to be able to launch their solutions on top of.
Now, for April, you guys have also raised some money. How much capital have you guys raised to date?
We've raised $80 million across 3 rounds.
That's amazing. And what has been the experience? Because I mean, obviously, you had raced before for your first day rodeo, and it was all about like also learning a lot. So, based on all those lessons learned, what did you tell yourself that you were going to do differently when it came to raising money for April?
I think the biggest thing is you have to really set out an audacious vision and believe that you're going to be able to make it happen. I think entrepreneurship, especially one that involves venture capital, is a rule of exceptions. And all too often we try to sort of revert everybody to the mean. But the reality is that the things that work are the ones that are the exceptions. And so I think you have to be willing to take some leaps and you have to be able to enumerate those leaps. And so for us, there were a number of things that we said, look, we don't know if this is going to work, but here's why we believe we can make it work, and here's how we're going to know if it's working. And so, for example, when we said we're going to do this, we went to the largest, let's say, custodian in the world, okay? And they said, great idea, guys, but I don't think you can build this thing, right? And so we realized like just building the tax engine was a huge technical and regulatory hurdle that we were going to have to get over. No one's done this in at the time more than 10 years, now 15 plus years. You have to go get your software and company approved in every US state. And you only get one shot per year at doing it and then proving it. And so not only did we have to go get the regulatory approvals, but we had to prove to the market that this would work. Now we've done 6 figures of tax returns on our system across the country. And so I think we've proven it without a shadow of a doubt. But that was a difficult process. We couldn't just show up to the market and go to a Fortune 10 bank and say, hey guys, we built this, will you use it? They're going to want to see a track record. They're going to want to see acceptance rates, resolution rates, a multi-year process. And so I think that was one thing. The second thing was the model, because heretofore in the US market, either you went to an accountant or you went to TurboTax and H&R Block. And so from a business model standpoint, there was also risk to prove that digital banks, payroll companies, and the like would adopt these capabilities and be willing to pay us. And so over a period of 3 years, we were able to show that they would be willing to engage, that they would get value out of it. So for example, we were able to show that digital banks were getting more deposits on platforms. Wealth management companies were having higher LTVs. Small business platforms were generating millions in fees. So we were able to show those things, and we were also able to prove that they wouldn't just refer those business to an accountant or Intuit, but they would actually be willing to engage in more of a wholesale SaaS arrangement with us. And so that really took 3 years. And when you look at our funding, we kind of raised $40 million right at the height of the market. So it kind of came in a seed and Series A that we had done together. And our valuation was pretty high at the time. And now we had an acquisition offer that was even higher. And it was, sort of the end of the 2021 boom era. I think people sort of say we were one of the last sort of major fintech rounds done before the gates closed at that point. But then we went through a pretty tough period where, according to our plan, we were just building. I mean, that's what we told everybody that we were doing. But everybody in the market wanted, it was sort of a show me, market. And so you had to come with big revenue numbers. And fortunately or unfortunately for us, that just wasn't the way that we designed this plan. We said, we're going to de-risk this, we're going to build, but the revenue is going to come later. And, sure enough, we got to our first, million odd revenue, and the business has grown about 9x this year. And so we're doing, very, very well. But there were moments there where, some of our most trusted shareholders and advisors, were asking us tough questions. And I think eventually, with them, we built a plan that worked, and we were able to raise a very successful $40 million Series B earlier this year, led by QED investors. But I think history is comforting on the one hand, but I think we don't forget some of those tough moments that we had along the way, for sure.
And QED with Nigel, that's an amazing team. So well done. I guess in terms of two things that come to mind here is one, how did you go about choosing your investors this time around? And two, how has it been to the experience for the first time of operating and leading a growth stage company that you founded? Because the first time, you really got stuck on the early stage, and now, is where you're getting to see like more of the full life cycle of a company.
Yeah, redemption, or at least on our path to redemption. I think, the self-doubt is definitely a factor there, right? Like, can I do it? I think the thing for me is that different parts of the journey require different things, right? And so actually some of the places that are required early, like patience and a little bit of finesse, are actually not my strong suit sometimes. So I think I'm actually more suited as an entrepreneur to some of the middle and later parts of the journey. And so some of those parts really, challenged me at the early stages to deal with the -1 to 0 and the 0 to 1. I think now we're kind of clearly beyond one, not at 7 to 10, but somewhere right on the way. And so, I think for me, I actually feel very relieved, kind of moving beyond some of those early stages, because now I'm out of the gate and I'm dealing with a business that's in market and competing every day to win market share. And that's obviously, as an entrepreneur, what I love and why I'm in the game. There's sort of the inventive process, right? And so for me, Daniel is kind of really the inventor. And I think that's where the partnership really, takes shape, because he's really excels on taking things from -1 to 0 and enjoys that part of the process. And so um, I try to be additive to that, but that's mostly his show, and I think that's where we've really benefited by being great partners.
Now, for obviously, partners and getting partners, let's say on the investment side and getting market share from customers, also the employees, all of those, at the end of the day, they're betting on a vision, no, Ben, and on the future that you're living into. So, if you were to go to sleep tonight and you wake up in a world where the vision of April is fully realized, what does that world look like?
Yeah, I mean, if you think about the fact that tax touches every US citizen and every business, and you think about the fact that for most individuals, it's the largest single check they get in the year. For most households and businesses, it's the largest or second largest expense that they have. We're literally talking about trillions of dollars. And today, that is not optimized for most people and most businesses, because they don't have the visibility to make decisions throughout the year. There's not a person that has the totality of their financial picture in mind, right? They've got something with an advisor, something with a banker, something with a tax preparer. And so our view really of the whole market is that we're moving towards consolidated software platforms that will serve individuals with software primarily, augmented in some cases with human assistance, but that will be able to really recognize what that individual needs at any moment in time and optimize it on their behalf. And tax, we feel, is a huge opportunity and source of alpha. So an example is if you're running, a secondary transaction for stock, and you want to know how much stock should I sell or how much cash do I need to set aside. There's not a good way, to really explain that right now. You have to get an accountant. You have to pay them a lot of money. It takes them time. It's not necessarily what they do. By the time this podcast is released, I believe we'll have made a very large announcement, of a use case in that category. And so for us, it's really about bending the curve on the one hand of how tax manifests itself and how decision making is presented to the customer, where they're actually getting more dollars back in their pocket. It's a way for these all-in-one platforms, and whether that's wealth management being, a family office in a box, small business platforms want to be a business in a box. So it iterates differently across the ecosystem. But tax is obviously a pillar of that proposition. And then third, I think tax is the most powerful data asset, that's available. And so if I elect to do my taxes with you and I elect to share my data with you, which is a right that I have as a taxpayer, then in theory, you should already know everything about me and you should be serving up the next best thing for me. You should tell me, hey, this is what other people in your income bracket are doing. These are what other, individuals that have the same profession as you are doing based on your family circumstance. Here's what you need to be thinking about. And this should already be happening for you in real time and on your behalf, right? And so I think when we think about that agentic future, or that sort of self-serve personalized future, we think that tax is a must-have behind every financial services provider. So that's the future we imagine, is that tax is embedded everywhere and we're the financial infrastructure powering it.
So, talking about future here, let's say shift to the past with a lens of reflection. Let's say I was to give you the opportunity of getting to a time machine, and you arrive to the NYU campus, and you're entering there, the class where that younger Ben is at, where he is thinking about starting a company, and you're able to give that younger Ben one piece of advice before launching a business. What would that be and why, given what you know now?
Don't be so hard on yourself. And I think that's specific to me, but it's probably specific to a lot of my peers also. I think I've beaten myself up over the years and been very hard. Hard. I'm my own toughest critic, right? And actually lost a little bit of vision in my eye last year and had to kind of like sort of like reassess some things in terms of just like how I managed my own health and played for the long run. And so I think it's just a reminder that it's like only the paranoid survive. If you're already doing everything and you're doing everything, then kind of you have nothing to worry about. And just make sure that you enjoy life and enjoy the process along the way.
And I think that's such an important thing because founders, especially on their first business, they just go all in, and they make so many sacrifices, and especially on their health. I guess in this regard, which is what you were alluding to, how do you think founders should be looking into this, looking into the real balance, looking into prioritize what matters? I mean, what have you learned, in that perhaps you can share with folks that are listening right now?
Look, this is just my learning, and I think there's a little bit of provocation going on X and some other platforms. But look, I think I work just as hard as any founder, if not more. I think most of my family and friends would say that I'm working most of the time. But I think what work is and how you prepare for work is a little bit different, or I look at it differently as I got older. I think when I was younger, that meant sitting in front of a computer for the most hours that I could until I literally passed out. And I think as I've gotten older, I look at it through the lens maybe more akin to the way that a professional athlete would look, right? Sometimes I'm playing the game, sometimes I'm preparing to play the game, sometimes I'm working on endurance, sometimes I need to take a step back. And so now, whether it's my diet, my exercise, my space to think, my space to work, and also doing things that are not necessarily work, but maybe things that are sort of like in the middle, right? Recruiting, meeting colleagues out of the office. And so I think you have to look at all of those things, and the balance is going to change based on where you're at in your career, based on the type of business you're building, based on your own strengths and weaknesses. But I think it's clear that as I've advanced, I can do things with more efficiency than I was able to do, right? Something that used to take me a week, I now know how to do in an hour. Something that I wasn't I didn't have as many connections early in my career. So I would have to take a month to network. Maybe now that person's a phone call away. And if you transition that all the way up to the greats like Elon Musk or Mark Zuckerberg, it's tenfold, right? Those guys probably could do in 5 minutes what would maybe take me an hour or a month. I don't know. So I think that constantly finding ways to maximize your efficiency and get more punch for the time you spend is really important. I think you have to take a wider view than just like how many hours are you in the office, and be realistic that that's not always going to be the thing that's most productive for you or the business.
I love it. Ben, for the people that are listening that would love to reach out and say hi, what is the best way for them to do so?
My email is ben@getapril.com. Feel free to reach out.
My God, easy enough. Well, Ben, thank you so much for being on the Dealmaker Show today. It has been an absolute honor to have you with us.
Thank you so much for having me.